You ever open your trading app and thought, what the fuck am I even looking at? It's overwhelming, and that's fine. Most traders start there. Day trading means buying and selling assets like stocks, crypto, and futures, all in the same day. You're aiming to profit from short-term price moves, not hold positions overnight. A stock is just a small slice of a company. When you buy one, you're essentially saying, oh, I think this company will do well, and I want a piece of that. These stocks are typically traded on exchanges like the NYSE or NASDAQ, which are online marketplaces where supply meets demand. If more people want to buy it, the price goes up. And if more people want to sell, then the price goes down. Simple. Now, if you've ever watched stock climb and felt like you've missed out, that's supply and demand at work. As a trader, your goal is to predict those short-term movements and profit from the difference. You're buying low, selling high. This is long positioning, or selling high first and buying it back lower, which is short positioning. Every setup begins with a trend, basically the market's mood, up, down, or flat. Check higher time frames, which are usually the 4-hour and 1-hour for bias, meaning if you believe that the chart is an uptrend, then you should position long. And if you think that the chart is in a downtrend, then you should position short. You can check mid time frames, which is your 15 minutes for key levels, and lower time frames, ideally 5 minute to 1 minute for entries. Now, you can add a 20 period exponential moving average known as EMA, which weighs recent price movements. In an uptrend, only buy above the EMA. In a downtrend, only short below. Confirm moves with rising volume that spikes showing conviction. But this is not gambling, it's merely reactions. So react with a plan. That plan relies on trading foundations, starting with risk management. This is where you either build stability or lose control. Only risk 1 to 2% of your account per trade. That way, one mistake won't wipe you out and you can stay calm. No matter how perfect a setup looks, you never bet your whole account. If you've blown an account or chased losses, you know why this matters. Never bet the house on one setup, and always know your exit before you enter, even if that means taking a small loss for the day. Now, choosing a trading style. We have scalping. This is ultra fast trades, seconds to minutes, in and out for small profits. This requires high focus, low latency, and tight stops. Day trading. Opening and closing within one session using 5 to 15 minute charts. You have no overnight risk and might require a few hours of screen time. Swing trading. You hold for days or even weeks, scanning on daily to the 4-hour charts for bigger movements, wider stops, and should fit anyone with a day job. Position trading. This can take up to weeks to months based on fundamentals or macro trends. You're going to require deep drawdowns and have major gains. What a real-world trading day might look like. You wake up early, scan the news and economic calendar. You mark key levels on your charts, and then wait, and wait, and wait, and then wait. Because most of the trading is watching. When your setup appears, you pull the trigger. Win or lose, you journal it. Entry, exit, size, emotion, and a lesson learned. Logging every trade can be critical. Start a weekly review of what went well and what went wrong. Over time, your journal becomes your personal playbook. Prices are not random, they're reactions. Reactions to news, psychology, liquidity, and even institutional algorithms. When volume spikes, it usually means something. Maybe a breakout or a trap. You learn to read these clues. Remember, trading isn't about prediction. It's about disciplined reactions and having a plan. So, why do most traders lose? It's not the strategy, but the behavior. They overtrade, chase moves, double down on losses, skip journaling, ignore risk, and jump from strategy to strategy, hoping one will finally work. If you've ever found yourself thinking just one more trade, you've probably been there. This isn't coin flipping. It's disciplined when you're wrong. Successful traders survive mistakes, stick to the rules, and refine their process. Your mindset matters. Begin each session with an affirmation. I follow my plan, regardless of the outcome. Try to take breaks after 3 trades or a 1% drawdown. If emotions spike, step away. If you're serious, start slow, focus on process, not profit, master one setup, journal every trade, manage your risk, and learn from each step. For more structure, check out our Notion Trading Journal and the Night Owl website, designed to guide you through each market session. Trade wisely, stay disciplined, and good night.